Good morning, everyone. All right, so I think it's ready for a little stall. Nothing severe, a stall. All right. Yesterday was an up day. Looking at the S&Ps here and wide range bar. Of course, that's 24 hours. We'll look at SPX. So whenever you got a wide range bar, right, you figure there's got to be a void because it moves so quickly. There's going to be a void in a smaller time frame, and you can see that right here. Right? So now it's stalled up here. And common sense says, look, at some point, prices pull back. As we talked about, firing on all cylinders, everything looks great. Internals weren't at an extreme yet. We'll take a look at them. A stall in the price action and a little pullback is likely. Now, major support is way down here on the futures. Minor support is here. And around 50%, give or take, is about there, just eyeballing it. So any pullbacks into this area will be viewed as being buyable. It should make a higher low. That's usually what happens after a run like that. Since we've got a wide range bar, now this is, I'm applying the same thing we do to everything else to the futures. And the difference is that this trades almost 24 hours. So you don't have the gaps for the most part. So looking at this particular chart, we want to see prices, the open and close, stay in the upper 50%. If it's really strong, it'll stay in the upper third. If it dips down here, buyers will show up. It'll push it back up, and it'll form a bottoming tail bar. And it's part of our bar by bar analysis. And the other extreme would be if we get a red bar today that closes below that bar. Seems unlikely, but if we did, it would be bearish. No indicators, just a little common sense necessary to say, oh, that was bad. Like here, that was bad. That was bad. That could be followed by good. This is real bad. By the size of the bar. Right, exactly. Keep it simple, stupid. And you left the last word out. Because look, it's not stupid when you don't know. Right? What stupid is risking your money when you don't know anything, without any education. That's stupid. Guilty as charged right here. We've all done that. Why we do that when it comes to the markets, I don't know. Fear, greed, I don't know. We've all done it. And so yeah, exactly, Rocco. But it's not. We're so excited about making money in the markets. So it's an emotional thing. I often make the analogy that most of us, if not all of us, would do more research to get a new cell phone as to its design and the kind of camera and all of that kind of stuff, rather than what we're going to do in the market. And so I say that, and I've said it many times for those that are new to the markets, to realize, hey, you know what? Maybe this guy's saying something I should pay attention to before I press the button again. So, all right, so let's continue here. And so we got a bias for this chart. And we look at SPY and we'll apply it to an ETF, and we see the gap. Right, so I wouldn't call it an exhaustion gap, right, because this came out of a consolidation. More of a continuation gap. But now, what does it do? It's in the upper, right? We got this little void, a couple of days up. So I'm saying it's ripe for a retracement, pull back. We got more economic numbers on Thursday again. So some kind of backing and filling. So what do we do with that? Well, we look for things that underperformed. Right? Things that are maybe pullbacks to the 20 or pullbacks to the 50, which we can scan for. Things that maybe are going sideways. And so the other side of that is, well, if the markets are ripe for a little bit of a stall, right? A stall could be a little sideways pullback, whatever, not a big deal. But sometimes breakouts start to fail under those situations. And let me just take a quick peek at the internals, because until they reach an extreme together, once they do, then we're going to have a real high probability of breakouts failing. And we don't have that yet. Our equity put call ratio is still below the bands. right? Not pushing up. Uh, breadth here is near zero. A lot of times when it comes off of this low end extreme, the zero area is where the markets often stall because this is a very broad measure of breadth. That's what it's doing. So you've got this little push, and a lot of times it's a stall. It's a general guideline. Total put call ratio is just flat. It's neutral. And I don't look at too much as far as patterns on these things, but I have seen over the years where they do play out. And what I'm looking at here, see this? Like you can all see it. See this like head and shoulders top? Now, head and shoulders top, that could flip right back up. But I see that and think, could it pull back? And the only reason it's going to pull back into those lower bands is if this starts to come in a little deeper than what would be expected. And then there'd be there'd be an increase in put buying, which would be natural. So I'll leave this drawing on there. We'll take a look at it in a day or so, and we'll see, was it meaningful, to point this out or not. All right. So breath here yesterday was neutral. Right? It was pretty neutral all day, but it was on a big up day. And so those of you that get the newsletters, one of the things that I mentioned over the weekend was that as prices started to move up, it was accompanied by this breath above 1600, which is what you want to see as prices start to advance. And now we had a pretty meaningful move yesterday, a gap up and go, and breath stunk. So that could be another reason that prices, besides just being short-term extended from support, ripe for a retracement. So we see a day like that, we want to see good breath accompanying it, the confirmation, and we didn't have that yesterday. Right? SPX got further than our extreme numbers yesterday, but I did say the put side was more of the no-brainer, and it was never touched. All right, so these blue lines that I've added today, they weren't there yesterday. These are the strikes, and there's one around this one. I don't know whether, I think it was 35, and this one here I think was 85. Huge open interest in puts and calls expiring today. That should set an area of resistance, which we already know. This is up a few days in a row. It's kind of flat here. It doesn't mean it can't go up at the open. Right? This is our far strike today, 85.95. If we could have got on the other side of 9,500, that would have been great, but it's not. If this goes up at the open, that could happen, because when you get a whole number, there's just going to be that natural stall there. It often is. So if prices pull back today for some reason on SPX, be aware of this number, because it often will tickle that or go a little bit under it, and it'll flip right back up again, because those options will become very profitable. And as they get closed, it has a tendency to flip prices back in the other direction. The top number, I just adjusted it. You can see right there. Right? So it's close to a whole number. And so you've got this line of defense, so to speak, like I like to call it. So if it does get an advance, the call side should be good. And I think both sides, when you've got these big open interests on the opposite sides, of your calls and puts, you've got a pretty good support area, and that's prior day's low, and you've got a pretty good resistance area. So it's all good there. All right, let's take a look at other markets, and we can hand it over to Dan. This looks great. Right, looks great. Not doing anything today. I think these, underperformers, semis, tech, should continue to outperform. You've got this wide whippy bottoming action. It tightened up here. The red bar ignored. The bottoming tail bars there. The little breakout. So could stall today, but still looks great. Should not close below that bar. Common sense. Dow down a bit here. It led. It's coming down kind of hard. Right. So not really a big deal on the daily time frame. And here's the idea of the void, and so, okay, it's ripe for a pullback. And mark off your reference points. That's some support area right there. Probably where buyers are going to come in. The Russell, looks great. Daily time frame, it's into a mess. Likely pull back a little bit. Well, yesterday we thought it could be more of a quiet day. Didn't happen, right? If markets moved up, some more than others, not a big deal. But today is more likely to be that quiet day where things begin to build new support intraday. Bitcoin up at resistance. Coin moved up. If you look at coin, it's up at resistance. These stocks related to, Bitcoin, they had some substantial moves. Gold is consolidating at the congestion, absorbing supply. Dan always reminds me, people get confused with that. What the hell does that mean, absorbing supply, Greg? Well, if you just think about it from a mechanical point of view of what's going on between buyers and sellers, we interchange the words resistance with supply and demand, support with demand. And when you get a strong move into the resistance where the supply is, if the price action goes sideways, we use the term absorbing supply, or just call it bullish price action. Why is it bullish? Because it's not going back down. It's sitting there going sideways as demand says, I'll take all you got, and it absorbs it. I think it's maybe the first time you hear that, maybe it's a little confusing. But after that, really comes down to understanding things beyond things like bottoming tails and morning stars and dark cloud covers and all those fancy words for price action. Silver not doing anything. Oil down a bit. Looks like it's heading back down toward the base into the support. We'll see if it holds or not. Let's take a look. We don't look at copper too much, but yeah, copper's pulling back. So another reason why potentially the markets might take a little breather. We didn't look at interest rates yesterday. Take a quick look. They're stable here. Not a big deal. No takeaway from that. All right, the 10-year is stalled. It's had a heck of a run. And so ideally this retraces a little bit. Because if this keeps pushing up, we might get more than a little retracement. And just take a look at the ETFs quickly. Yeah. See the size of the gap, no big deal. Big deal. See, continues to advance, but near the prior high, it dipped a little earlier. So, you get these gap ups. So gap ups create voids. Wide range bars create voids. Is a relatively large move compared to the prior days. That's significant. It's likely that things could stall a little bit. So that was the idea of today, ripe for some kind of a retracement. It could be a time correction, which means sideways. SMHs, a little extended. They could rest a little bit. Financials, a little extended. They could rest a little bit. They're gapping up. Look where my cursor is on the daily chart. Could be some call spreads there, Dan, if we get like 5-minute lows or 30-minute lows, something like that. See what's extended? That could be a short-term exhaustion gap, but it did come out of a consolidation. Bios, so we talked about, positive development of speculative issues, beginning to play catch up. So bios, regional banks underperformed, and they, lifted up from this consolidation. Now they're up into resistance, gapping up closer to those pivot highs. So as we look at more and more information, it reinforces retracement, stall, maybe a narrow range day. And yeah, we'll see how this unfolds today, but we've got a general bias going into the day. We got some reference points and that. is a good thing. All yours, Dan.
Good morning. Yeah, I'm actually surprised the markets aren't up more with all these banks rocking again. That's what got things fired up the other day. And look at this Benzie. I just saw going by the ticker. Look at that. Wow. I wonder, is this China? I don't know what's going on there, but it's fascinating. Yeah, I'm an XLF2 or ETF trader, and I'm thinking I'm going to sell the Friday calls. So wait and see where if they have 4750s, what they look like. But yeah, this looks fantastic. We were in it. We were in it on that green bar right there. And added these three moving averages. Let's look at my alarms that went off. Teradyne, I don't see any prints, but my up alarm went off. Same with SSNC. I had shows it up 92 cents, but I don't see any prints for that. RTX, we've been in for a while, small gap up, been dead money. But I moved the stop to yesterday's low. Blaze had an alarm go off, but again, no prints. KKR, we're in. I had an up alarm. Apple, we did a put spread yesterday. And remember pre-market yesterday, I said this would be a fabulous day trade because of this gap here on the 15-minute chart and bullish pre-market. And then it just took off yesterday. So we did a put spread on the afternoon breakout, and I said move the stop. And then yeah, my XLF alarm went off. All right, earnings. ACI. That 30-minute high, not bad. It's a messy bottoming pattern. PGR. This is a strange looking chart. Wide range breakdown, bear 1, 2, 3. It recovered. So if it can chop around here and take out a 30-minute high, it's an inverse head and shoulder now. See what that does. Schwab, wow, we've been trading this a couple times over the last few months, this bottoming pattern. I actually missed it here. Okay, see now this is an excessive gap. This is excessive. The 30-minute low, I would say, could be a call spread. Yeah, that Dollar Tree bottom right. We actually shorted this yesterday. It looks great. Nice closing breakdown, relative weakness. Yeah, so when Berg was talking, I saw the diamonds tanking here. And so I immediately just looked up at the Dow 30. I'm like, what is dragging this thing down? And UNH had earnings, but it accelerated lower. Right. No earnings PGR. All right, so I don't know why I got it there. Yeah, so say right, the Dow is stable right here at 581. And just to remind other people, the diamonds are calculated based on the price of the stock, not market cap. And so hence, this expensive, this is the most expensive Dow stock. And J&J. Swapping around the pattern. BAC. Oh, that thing. We had naked 40 puts that expired at full profit on Friday. And we said yesterday, my bias into earnings is the chart bias because that's the tools I use for trading. And I had a bullish bias on this thing, and it's playing out the way the chart suggested. Goldman. Okay, so this is another blowout one that's in the Dow. So this one's the offset to the Dow here versus UNH. Again, it's the acceleration in the UNH. But for this thing being up, the Dow obviously would be down more. Charlie, that's bullish, came out of consolidation, breakout, but this would have been my target. So yesterday would have been my target. So now it's going up to the next target area. This is not bad for a new trade. Breakout, daily, weekly, monthly. The gap's not too big. So this I like. I have K-Web here. K-Web, it's China. We'll come back to that. Eric, 822, gap's too big. Let's say hypothetically it was gapping to like 760. Then I would be all over that for a 5-minute high. Because then that would be a beautiful igniting gap with a void. So say now 820 is off the charts here. STT. Now say that this one's also a breakout, daily, weekly, monthly, but see how this one has been up multiple bars. So for a new trade, I like this PNC substantially better because it came from all this consolidation. It's rested more than 5 fluid bars up. So that looks great. All right, yeah, K-Web. A lot of stuff going on with Kyle Bass was on talking about China tensions and all, and he was saying he was not speaking very favorably about the Biden administration's international stance. He's like, this is the worst administration in decades to have your back on war issues. And he says, this would be the time that your enemies should be doing whatever bad stuff they're thinking about doing. So anyway, K-Web's more tied to stimulus. They're addicts just like we are here with our Fed cuts and stimulus, crackheads. So that's what's been moving this thing around is stimulus. And remember, we were saying ever since this red bar, I said this thing's gonna crack, just a matter of when. And then after yesterday's top and tail bar, that's a bear 180, now gapping below with a void. I think this thing's coming back to 30 bucks. So that's a short idea. And then obviously all the usual suspects. And I would love this pattern if it were not capping so much. Like right there, 2130, I'd say short of 5-minute low. There's like 10 stocks in here, usual suspects. JD's actually holding up a tad better because it hasn't violated those lows. Trump, DJT's been on a tear here. I forget who it was in the green room, but it was right on this day. He asked about it, and I said, sure. Yeah, that's the place to do it. You know, you had a deep move, small little cup and handle type thing there, hook pattern, Greg says. I did not expect it to go this far, that's for sure. Look, it was gapping to 34. It was gapping right to the 200 this morning. So I look at the volume yesterday. The last 3 days, look at the volume. I think this thing's getting toppy. It'll be a call spread watch. Yeah, I think it was you, Steven, that asked about it. All right, this one. So Alex, see these 3 bars right here, little bear sandwich? It reminds me of the stock I just posted. Where are you? CELH. See this? Bottoming pattern, gap up, bear sandwich, bottoming tail, void. This thing can go to 40 bucks. So look, this is the point I'm getting at is I would have been all over this on Friday had I seen it. It's very, very similar pattern here. See that? So hopefully that CELH will do the same thing. But now it's gapping up too much. Mobley, I have an alarm on this. Reg 1295. Because if it can negate this gap down and take out yesterday's high, then it's a nice bottoming pattern. But if it doesn't do that, then looks bad. Here's a 1, 2, 3 wolf. We also, you know, so we all kind of laugh at ourselves. So see this green bar right here on 10-9. We actually had this as a long idea. And then the next day I canceled it. I'm like, this thing's a dog. And then how many times has that happened to you all? You stop watching something and you come back to it and the thing has flown. And then you're like, man, oh man, oh man, I should have kept watching it. But it was a 1, 2, 3, but now the gap's messing it up. All right, shoot, man, I got earnings, their bells going off here. I didn't get to oil. I'm sure Greg covered it, but you know, there are a couple of news items there in the oil. Israel saying they won't strike oil fields, you know. Yeah, that guy was also saying, yeah, Biden is doing whatever he can to stave off whatever he can until the elections are over. All right, alarms everywhere here. Let me focus, man. All right, Corning is triggering. That's a nice little 1, 2, 3, little kind of mini bull flag. Looks great. Um, yeah, that's a beautiful pattern right there. So that's a go.
Nest was strong this morning initially. Maybe that ready for some bounce.
Yeah, nice 15-minute chart. Yeah, Disney is who?
Banks, KRE, but it's up with that resistance.
Yeah, they got construction under me, so the noise is horrendous. All right, so Meta, Amazon, Netflix all tanking. There's a small kind of M top. It's not, big enough momentum move, but it's topping tail retest. If today were Thursday, I'd be all over that for a 1 DTE call spread. Amazon, same. If it were Thursday, I would do a call spread. Our Apple, the best. Let me see where our put spread is. Uh, Nvidia's filling the gap. AMD is weak today. SMH has filled the gap.
Goldman Sachs has earnings tonight, Dan.
No, it's pre-market.
Oh, was already?
Yeah, that's why it's up so much. Um,
You
wow,
think 550 is too close to do a call spread?
depends on number of days. If it were Thursday,
Friday.
I'd be all over it. Right, I'm saying, or um, let me look. Usually you don't like fading big gaps.
Well, when it's up from 500 to 540 in a week, look at straight up like that.
It's too spready right now. $5 wide is 56 cents, but it's spreading. All right, alarms. Let me go through these. EWBC we're in. That looks fantastic. Man, I had like 12 alarms go off already. All right. I'll come back to this. Rambus, MU. So our semis are doing well. FDN down. I got short puts on this. I somebody remind me in the future, don't sell puts on FDN. It's friggin' spreads just irritate you. So I am bidding 10 cents to get out. And so the spread is 10 cents by 480. Idiots. Yeah. Absolutely. It's relative strength. Yep, we got our stop. But yeah, you can kill it early if you want. That's an igniting bar. Our Berkshire alarm looks fine. And those PNC I mentioned. Finex up alarm. Just going to see if we have any problems, and then I'll come back to these one by one. Okay, RGE. No, so well, TIVA is a bad alarm, but all the others are good alarms. All right. Sell a third A and F in the strength. Look at that Corning. I said it. I said how wonderful it looked. And that's just, I'm sorry, this stupid noise. Greg, turn my.
It's not that bad, Dan. It's not. It sounds
No.
worse to you than it does. I think it sounds worse to you than it does to us. I hear it, but it's not terrible.
Oh, of course, it's mind numbing horrible for me. I had to turn up my mic to hear you.
Thought it was that girl you had locked in the trunk.
And she's unconscious. She's counting off. All right, so that looks great. And tap. Yeah, it's slow mover, but yeah, grinder. Yeah,
Goldman filled the gap.
I didn't see the. Wow, wow, that was a quick one. Oh, XLF. Let me sell calls. All right, so it backed off. 47. All right, 30 cents. So I'm gonna do that. That's a 30-cent hedge. All right. So Greg, we're in the ETF letter, but we don't give them option trades, but that's what I did. So yeah, we're in PubMed, but yeah, looks good. Paradigm. UNH not bouncing. Yeah, things looking more weak here. Apple up alarm. Nice, nice. It's the best looking FANG today. Alex, your whiskey mic from yesterday, I'm still watching. Mobley. Hey, remember what I said pre-market? If this thing can negate the gap down, let's see how it closes. bidding 10 cents, half apple. Um, and 1067. Should be fine. Yeah, it's right over this base. Yeah, let's stop over the base. That's fine, Ron. Relative weakness today. That's the main stone. Lulu up alarm. Funny. Yeah, looks, yeah, I like it. If it had a bigger flagpole, it would be a bull flag, but yeah, today's your something something bar. Nice 15. Wow, IWM ripping here. It's not banks. Now it's PNC is moving.
KRE rip.
All right. Hey, XBI is a 1, 2, 3 growing. Looks a little similar to IWM. The way it has some junk over here to the left.
It's got that pivot there, and
Mhm. Let's see. That looks good. PNC has room, all time frames. But let me put A in a window. Looks good. I like it. Options are too spready. All right, let's do a half lot. I like it. Hey, Lulu could be a long now. We got a put spread, but um, let's buy 30-minute high. Stop yesterday's low. Is that what Sam told you?
look at Google go. In light of talk of breaking it up with this advertising this morning.
Mhm. It's sloppy, but coming out of a base, it'd be a better foot spread if there's anything. I got an alarm on this thing, 1330. 1, 2, 3. Berkshire, top of the range, looking good.